So we are on this subject of the future of China's balance between planned economy and a market economy. And that's our central discussion here today. A word or two from me before we throw to our three panelists, and then we're going to have a conversation among us. The word from me is a bit like this. I first came here back in 1984. The debate in 1984, when I lived and worked in Beijing, was about the balance between a planned economy and a market economy, between Deng Xiaoping and Chen Yun back then. In the intervening 35 years, China has fashioned its way forward, as Deng said, feeling the stones to cross the river, 摸着石头过河. And so what we've seen is this extraordinary economic achievement. China now, 16% of global GDP. When I lived here, 1.8% of global GDP. China now, a upper middle income country. Back then, poor as poor. And China now, a new force in global technology innovation. But also China now, one of the largest emitter of global greenhouse gas emissions. And so this is the China we've arrived at. So the questions that I have for our panel to address in each of their remarks are along these lines. 35 years later, we're still debating the proper balance between a planned economy and a market economy. In fact, Chairman Xie just mentioned before the important decision back in 2014 by the third plenum of the 18th Central Committee to place the market at the absolute center of the Chinese economic model as the most efficient allocation of resources. So the questions we've been asked to reflect on are, what are the debates emerging within China about the balance between market and plan, between the private sector and state-owned enterprises, and simultaneously between party and state? Where's that balance going to be for the decade ahead? Secondly, if you are looking to the next 5-year plan and through the 1920s, when China could become the largest economy in the world, what form of market reform agenda will prevail? And then finally, how will this China economic model impact the world, given China's domestic model is no longer domestically quarantined? Its impact is now global. So they're the questions we've been asked to address here today. And to begin, I'm going to ask my good friend Khaldoon to open our discussion, and then we're going to proceed with 3 or 4 minutes with our three panelists, and then we'll have a much more open discussion moderated by me. Khaldoon.
Thank you, Kevin. First of all, it's a pleasure to be here. Always a pleasure to come back to China. I have, as a measure of how the world has changed, I've been running this global investment company, sovereign fund, owned by the government of Abu Dhabi. And over the last 20 years, I've gone from maybe 20 years ago coming to China once every 2 years to now I probably come here once every 6 weeks. And I think that gives you an indicator of how the global investment community has moved over the last 20 years, and particularly if you are in the center here. Abu Dhabi is in the center between East and West, and we've been traditionally, historically, investing predominantly in the West. I wouldn't say that we are pivoting towards the East, but rather we are continuing a heritage of investing in the West, but now also investing in the East. China is a fascinating country, fascinating place to come, and certainly a fascinating place for an investor to invest. I would say what excites me most about China is, I think, let's start with the first view that I'll be interested to see from the rest of the panel, and I'm sure everyone around the room has a view about this. China will become the largest economy in the world. It's a matter of time. Is it in 5 years, 10 years, 20 years, 30 years? I think this is obviously a subjective point, and economists around the world will have different views on this. But I think if you're an investor like us, which takes a long-term view, being active in China has to be an important strategic imperative. And that's what we're doing. what we've seen over the last 5 to 10 years is a significant transformation that all of you have seen in the market here, in the ease of doing business, in the rise of entrepreneurship and the technology sector here in China in a way that's been quite remarkable. I'm very excited about that, particularly technology. If you ask me today, I look at technology, I look at life sciences, transportation, among other areas that I think will be very interesting from a global investor perspective in terms of investing and being part of this growth story here in China. I've seen China become much more open towards foreign direct investment. I've seen, the challenges in the early days, but more importantly, I've seen that evolution, the continuous evolution today, and I think in the years and months to come. I look at the entrepreneurial spirit, and I'm going back to this, that you see with Chinese entrepreneurs. And you can see it just maybe as a snapshot in the technology sector. You see these giants, Alibaba, Tencent, I see Didi in the crowd here, phenomenal tech companies, private sector driven, driven by very talented entrepreneurs that have been able to transform these companies into global champions and competitive, not just in China, but globally. That's a space that I think you'll see immense activity in because of the nature of the Chinese entrepreneur. The Chinese entrepreneur is very competitive. China is a very competitive place, and that creates a type of entrepreneur and then de facto a type of business that is extremely competitive and within, for the past, an already big market, which is China, but that is going to evolve into the globe, and you're going to see these companies coming out of China, not just competing in China, but competing, I would say, quite successfully all around the world.
Okay. Thank you, Khaldoon. Can I turn to you now, Neil, if that's okay, for your views? Then I'm going to go to Ning Jizhe. Neil Shen.
Yeah, I think what we have observed is that we see continuous robust growth in China for the whole economy, but more importantly, the quality of the growth has been much improved. And that's obviously very importantly because of the supply side reform. And we're seeing many of the growth come from innovation on business model, as well as increasingly more innovation through technology breakthroughs. I think this is really exciting. And I think China has really fostered a very robust ecosystem. So if you are a talent, if you graduate from top university today, your best choice probably not to go to a large company or Fortune 500 company if you want to get to the business world. You might want to start your own company. And this is a very interesting mentality among the top talents. And as an investor, we always follow the talent. And there is incubation facilities by various participants, including private and public partnerships. There are policies, encouraging loans to small media, enterprises. We are seeing obviously a very active venture capital, communities, and including seed fund to support that. Indeed, I think the last few years, the SME has been growing rapidly. I mean, we always hope to capture the very big company, but we know that some of those cannot make to the unicorns or to the billion-dollar company. But we need a very healthy SME community, and we've seen that happening. And I see that's actually a very important part of the China dreams, that you need many of those SMEs, many in the area like service sectors, which are probably more promising than the manufacturing sectors. And we have today's topic is the new economy. I mean, in the last 20 years, China has built some world-class internet companies, Tencent and Alibaba, for example. But increasingly more we're seeing is the traditional company are no longer traditional. They are digitalized themselves. If you pick any company, if you are a consumer product company, you can use technology to enhance your supply chain. You can use social media to do a better branding marketing. You can use e-commerce platform to sell a product. And you can use different type of SaaS, big data to enhance your internal management. So I see in today, the technology is no longer limited to those consumer internet companies or enabling software and hardware companies, but rather the traditional economies in China are digitalized, and they are all adopting different type of technology. And the other comment I want to make is that we see in many areas where China used to be lag behind, are catching up fast. For example, semiconductor. Clearly, in the last couple of years, with policy encouraging startups, there are many ones are being built in the sector. And another great example is biotech. Again, we see talent flow into China, many with multinational experience, and there are encouragement on new drug approvals from policy perspectives, and many startup companies have been built in that sector, and these will be that competitive in the global stage, whereby we have been lag behind against Europe and America for many of the healthcare area, drugs and or devices. So overall, I would say there's just a lot of bright spot that give us some great opportunity to invest.
Well, thanks very much for that. From Khaldoon, we've had a view that, in fact, China's become more open to FDI. From Shen, a view that, in fact, the dynamism of the Chinese economy coming increasingly out of a positive ecosystem driven out of private firms and SMEs, and that's where much of the technological innovation is coming from as well. We'll come back to these themes in a minute. Ning Jizhe, 3分钟到4分钟，好吧？
好。3 to 4 minutes, okay? Okay, I would be speaking in Chinese. I just listened to previous speeches in the opening session and the first session, and I think there are a lot of takeaways for me. China's economy since the founding of New China in the past 7 decades, especially in the past 4 decades since China initiated its reform and opening up initiative, has changed a lot. We have evolved from a backward agricultural country to a relatively industrial country. And also, we are transitioning from a planned economy to a socialist, or rather market economy with a socialist characteristics. And also, we are transitioning from a poor economy to an economy with a lot of middle to up classes. According to the latest economic survey, the second and third industry in China, in terms of the output, has already exceeded the first industry, and the second and the third sector accounts for probably 92 to 93% of the total GDP. Now, market decides pricing of commodities, and for this part, it is roughly 98% of the economy, and per capita income at the beginning of New China was about $100. Currently, it's over 9,700 or $800. But of course, China still is a developing country. The key is that in recent several years, there have been a lot of changes, especially after the 18th CPC Central Committee meeting. There have been a lot of changes which have attracted attention. We just had the 4th plenary session of the 19th CPC Central Committee, and that meeting also made instructions about China's mechanisms and economic development, etc. So there have been a lot of clear statements about that. So currently in China, we have formed the basic economic mechanism with the socialist characteristics. Public economy is the majority part, but we have different types of ownership, and there are different ways of distribution. We have market economy with socialist characteristics. Another key feature is that resource should be allocated by market forces. Market should play a dominant role in the allocation of resources so that market will be more important. After listening to previous speeches, I want to share with you several features of the Chinese market. You know, China's economic development is market-based, but of course, with the intervention of the Chinese government, there are several features of the Chinese market. First of all, Chinese market is the one with enterprises as the major participants. And I think enterprises are the dominant forces in China's market. According to our market supervisory board's data, currently we have more than 100 million enterprises in China. And yesterday we announced the survey result. We had the fourth economic survey, which I just mentioned, said the contribution of the second and third industry already contributed. And we have over 20,000 20 million enterprises in the second and third industries, etc. So this is the largest force in China, but this actually does not include those self-employed entrepreneurs. So this is a big base. That's the first feature. And secondly, the potential of the Chinese market derives from competition. I think competition in the Chinese domestic market is very fierce. We have SOEs, private enterprises, foreign invested companies, etc. They all compete in the Chinese market. And we have the largest amount of private enterprises, and they're very flexible as well. They're very competitive. But of course, you know, there are winners and losers. We have foreign invested enterprises. Actually, they're taking part in the Chinese economy more and more. In China, we have SOEs who are growing with competition. SOEs in China, after so many years of reform, have already built the so-called modern enterprise mechanism. In recent several years, I have been involved in foreign investment projects. And I noticed that SOEs in China, while go overseas, work with foreign companies. They actually can compete against foreign enterprises, including, you know, those advanced countries. But some of the SOEs in Southeast Asia and South Europe are still having the old mentality. But in China, the SOEs have already had this new modern mentality because of competition, and they're quite independent as well. What we need to do is that we have to prevent over-competition. That's my second point. Let me share with you two other points. First, about opening. Okay, since time is up, and let me stop here. But just a little bit, opening is another feature of the China's economy, and another important feature is consumption of the citizens in China. You know, as the per capita income in China grows in the future, consumption level will increase as well. And with that, enterprises will change their investment structures and product structures. The whole industrial structure will change. That will be a very important driver for China's restructuring in the future.
Thank you very much, Vice Chairman Ning. All the speakers so far have spoken about the competitive nature of China's economy, the role of, let's call it the private sector, the Ning Jizhe, and that's where the future lies. And we saw the anchoring principle of that in the 2014 party decision about the centrality of the market. Yet when we look to the speech at the end of last year by Vice Premier Liu He, he reminded China that all the growth in this country comes from the Ning Jizhe, the private sector. Most of the technology innovation comes from the private sector, and frankly, the bulk of the new employment in this economy comes from the private sector. So the question I'd like to throw to you next, Charlene, and then I'll bring others in, is given the direction set in 2014, given what Vice Premier Liu He said just last year about the centrality of the private sector, over those 5 years, do we see the private sector confident about its future, or do we see the private sector beginning to be concerned about a return of state-owned enterprises and party control? The saying in Chinese is 国进民退, that is, more role for the state as the private sector retreats. Your thoughts, Charlene, and then I'll go to Chairman Xie.
I think the private sector is mixed depending on the sector in which it operates. Parts of the private sector that receive government assistance, and many parts of the private sector still do. Parts of the private sector that feel favored in some sense, allowed to proceed without interruption or supervision, I think feel more or less positive. But I think generally there is significant concern in the private sector about the resurgence of the state, because that also implies a redirection of resources from the private sector to the state sector. And it may also imply, therefore, a slowing of innovation, which might otherwise occur in a private sector that is quite dynamic. And so the internal balance between state and private sector remains somewhat unsettled. And other than a few sectors that can identify specific benefits from that lack of settling out, I think there remains concern.
谢主任，这个国进民退有道理吗？ Does the question of the state being resurgent and the private sector in retreat, is there any logic to this argument?
这个中国啊，在国有经济、民营经济和外这个外资经济
We have SOEs, private sectors, and foreign-funded enterprises.
是应该说是
The central government
平等的。
treats them as equals. At the just concluded fourth plenary session of the 19th CPC Central Committee, we concluded that the basic system of Chinese economy includes three parts. First, the development of all ownerships with public ownership as the mainstay. And second is various types of distribution system with distribution according to the workload playing the main role. And third is the comprehensive development of all. So I believe that the private sector and the SOE are not rivalries. Actually, they coexist together. On the government part, we believe that we have to provide a level playing field for different kinds of enterprises in terms of law, in terms of market conditions, so that they have equal access to policies and conditions and resources. So under such circumstances, we hope for prosperity for all instead of resurgence for one and a retreat for the other.
Neil, if the private sector is happy with the current arrangements with the state-owned sector at present, why do you think we see business confidence in China suffering some pressure? Do you think that's because of the trade war? Do you think these are domestically induced because of policy settings here? Private fixed capital investment numbers are coming down. So how would you explain that?
Well, I think, first of all, in the private sector, there's always been very, very competitive. The competition, I think, means that some company will lose out and gonna go under. It's, I think, very natural, especially, in the new economy, because, there are obviously companies try to disrupt, this establishment. The meaning that a certain company need to be, may need to phase out. So that happened anyway. And then the other, I think, dynamic is that we're seeing, in general, we're moving from the manufacturing sector to the service sector because of rising of the consumption economy, right? If you look at some of those new economy companies like, Didi's and Meituan's, etc., they've been creating a lot of jobs in the service sectors. And probably, high quality jobs, relatively speaking, compared with manufacturing job, sectors. So I think it's a very natural sort of, a winner, if not take all, but take more of the market. But if you are not competitive, if you are in not in the most sort of promising sector, then clearly you will have challenges. But I think today, both the equity market as well as the bank loan market are encouraged to really back whoever they think is make the most sense. So seeing capital has been allocated to the where is the most efficient companies. So this is to some extent is helpful because consolidation have to happen in China. I will argue that in the last 30 years there have been less consolidation. We should see more winners in many of those sectors. And some company, if they cannot compete, if it's not effective, that I think if they phased out, if they actually died, that's probably healthy for the economy.
You're someone who follows very closely what's happening in Chinese tech, and so is Khaldoon from an investments perspective. Is there a danger in China, given that most of the innovation has occurred within the private sector, but you now have the Chinese state with a large scale, as it were, investment and to some extent intervention in the future shape of the technology sector, that it may actually retard private sector initiative in achieving the same sort of innovative breakthroughs that we've seen in the previous decade or so? A thought from you, Neil, and then back to you, Khaldoon.
Well, I think there's a great opportunity for the new economy to really spread out to different so-called traditional industries. So there is a chance that those large traditional companies can innovate themselves and enhance themselves. And there's so many verticals in China that big enough. The market is is big in both breadth and depth. Any substantial sector like auto sectors, real estate sectors, healthcare, education, they are all actually has issues in terms of efficiencies. And I see a lot of opportunity just applying digital technology itself, whether it's big data, AI, and software, that they could enhance themselves and become competitive. And not only competitive in China, but competitive globally. And I will argue along the same line of Dr. Jing had been said, that those Chinese companies, because they have been gone through all the battlefields in China, when they go out internationally, they have a good shot to become successful. They have accumulated so many knowledges and know-hows and so on.
So if you can survive in the Chinese domestic market, you can take on the world. Yeah, I get it. Khaldoon, your thoughts on this, because you're an investor.
Yeah, I mean, I think if you look at, and I go back about the Chinese entrepreneur. I spend a lot of time with Chinese entrepreneurs, Chinese tech businesses. They are very aggressive. This mindset of winner takes all, it's deeply ingrained in the Chinese entrepreneur. And that's, by the way, an advantage. It's an advantage. I think, China is moving towards a knowledge-based economy. And, they have all the, you have a youthful population, so you have a big growth in the population. You have heavy investment in the education sector. You have big commitments coming into R&D, both at university level and at the companies levels and corporations and SOEs levels. So heavy R&D investment. So all these things are moving in that same direction. You have this explosion that's happening within the entrepreneurial tech space. I see that continuing. I genuinely see that continuing. I think the role of the government and the role that the SOEs play in the economy, if you take the long view on China, it will stabilize. You'll have these ups and downs and turns, but I think it stabilizes. And I think if you take a long-term view, you have to be here, and you have to invest in that space. And I go back, always bet on the Chinese entrepreneurs and technology. They are very talented. They're very aggressive. They are within China. They fight like heck. But then once they are able to go out internationally, I think the world will see a very, very competitive set of companies coming out of China.
We've got to wind up in a minute. Charlene, last word to you, which is, we've been asked in this session to reflect on these tensions within China between market and planning, between private firms and SOEs. a quick burst from you on how important that debate is for the decade ahead in China and the world. And that is, if you have levels of Chinese industry policy supporting Chinese firms in the world, what does it do to the future of the global marketplace? Some concluding thoughts from you, and then I'll bring it to a close.
Well, I think that the question you raise is a very big question. Because, as China has said many times, its model is not exportable. But what is exportable are its economics and its economic policies, and the impact of those policies internal in China, as well as external on third countries. And to the extent those policies are built on the state or state planning or state subsidies, the impacts of the economic side of the China model can be extremely challenging for countries. To the extent the issue is the Chinese private sector entrepreneur making his or her mark, that sort of classic market-oriented competition, best person win, all fine. But to the extent it is the backing of the state and state funds and a state-directed strategy that is the purveyor of economic power abroad and the projection of that power, that then is where the real debate is joined. The debate between East and West, between market economics and state planning, isn't a debate about the importance or sanctity of entrepreneurialism and competition. It's about the instrumentality of the state and the ability of the state to direct, in effect, to direct outcomes based on economic largesse.
Well, ladies and gentlemen, that brings us to a close. 35 years ago, we had a debate between Deng Xiaoping and Chen Yun on 市场经济 and 计划经济, planned economy and market economy. 35 years later, guess what? We're into another phase of this debate, and now it affects the world, how it's resolved following Charlene's conclusion. Would you please thank the panel for their contributions?